And welcome to another episode of our primary market education series. Today I'm going to go through the SIG OM, and I'm actually focusing only on changes compared to the deal that they are refinancing. And this is due to our focus here in this series on how you can review deals quickly. So what I've done is I've run a black line between this deal that came out today and the deal that is being refinanced because I wanted to check for any major differences. Now, what we have here is the black line itself, and I've made some notes down the side of the things I would typically check for. We're expecting all of the sort of main deal features to be more or less the same. So when I go to guarantor coverage and I see that it is more or less the same, that the numbers are just a few percentage points off, I'm thinking that's probably fine, doesn't raise any red flags for me. And then I would just keep scrolling down, looking for red lines in the text to see if anything has changed. And the next thing that popped out at me was a change in the debt covenant. The consolidated senior secured net leverage ratio has been bumped up by half turn. So that's an increase in debt capacity under that ratio. So that would be secured debt capacity that could be secured on the collateral. And then there's a slight uplift of the credit facilities basket from 75 million to 90 million and from 75% to 80% of consolidated EBITDA. It's a modest uplift, which could reflect a change in the size of the business and their revolving credit facility needs. The other change that I did see was here that one of the baskets had been increased the fixed amount as compared to the grower. This is pretty standard for deals that are coming in, repeat issuers like this. They want those fixed amounts to go up, and if they don't have that specific provision that says that the fixed amount will increase in line with the grower and never go down again, which I call a super grower, then this is something you would expect to see. And this change is reflected throughout the OM and all the fixed and grower baskets, so I'm not going to take the time to go through every single one of them. Another thing I noticed that was worth pointing out was the addition of some calculation flexibility here. Now, this is still the debt covenant, and this language which has been added will effectively allow the borrower to receive an increase or a sort of primary commitment under an RCF. So sometimes these provisions will not just be a revolving credit facility. It could be a commitment under any debt obligation, but this one does look to be limited to a revolving credit facility for purposes of all of these baskets, and that would be called this applicable calculation. It can either be determined on the date that the commitment is entered into or established, or the date of any acquisition agreement if it's in relation to one of these, and then it does not need to be retested when the debt is actually borrowed. So that would be the reserved indebtedness amount, which is the reserved amount that at the time establishes a sort of high watermark for debt incurrence capacity. So that was one other sort of point I noticed in terms of flexibility that's been added to this deal. But in terms of market, that is very much standard. In fact, it would be kind of odd not to see something like this in a deal these days because you see so much more flexibility in calculations under covenants. And then the last thing I'll point out, this is going to be a pretty quick video today, is that the basket for secured debt, that is acquired debt or acquisition finance, has also been bumped up by half a turn. Also, not something that raises any alarm bells for me. Those of you with your Excel spreadsheets out will have a better sense of how this affects the borrower's overall, sort of capital structure. But I think all in all is a pretty standard repeat offering from an issuer who's been in the market before. Their last covenant package didn't seem massively off market, and this one seems to be providing a little bit of an uplift in a couple of baskets and some additional calculation flexibility. But apart from that, it is pretty much the same. So I hope that has been helpful for you all. If you have any questions, as always, don't hesitate to get in touch. Sabrina@foxlegaltraining.com. And if there is a deal in the primary market that you would like me to look at, please don't hesitate to send it over. I hope you all have a lovely evening, and I'll see you next time.